Hey, what's happening? This is Jerry here at Wealth Dynamics. Hey, I wanted to come to you live today. It's kind of dreary and raining, and it kind of reminds me of where the economy is at right now. It's a little bit unstable. Things are kind of gray and cloudy, not going so well with the stock market. The economy is not doing great. And I want to give you a special kind of viewpoint that I would have, because I talk to a lot of people and I'm like, hey, get out of the stock market. You know, I used to be in the market. I used to sell stock market products. I used to sell mutual funds and stocks and bonds, and I invested in them myself. And now I don't have anything in those products because I started to understand what's actually going on there, and it doesn't make money. And if it does, it's very minimal, but there's a lot of up and down and volatility. And so what I do is I teach people how to get out of the market. I teach people how to get in a position where they're not going to lose money, where they're going to make money. They're backed by real assets. And it's great, but for some people, maybe they can't get out, right? So if I have like a 401k at my work, it actually might be kind of frustrating because I'm seeing all this like get out of the market, stay out of the market, yet I can't, because if my 401k is at work, it's locked up till I leave. And until then, like, what am I going to do? It's got to stay there, right? And so I want to share my viewpoint. Now, this is not an investment recommendation. This is not investment advice. I'm not a stockbroker. I'm not a mutual fund representative. So obviously, if you're going to follow anything, you need to check with a professional in that area. But I'm just saying, if I was in the stock market and I couldn't get out, if I had a mutual fund and I couldn't get out, this is what I'd probably be doing today. Okay, I would probably be allocating to U.S. Treasuries. I would probably be moving my money out of the market. I'd be allocating it to U.S. Treasuries. And I would just wait and I would chill there. And I'm okay that it's not going to make a ton of money. And I'm okay that I'm not going to buy on sale and get all the ride. And my reasoning is this: interest rates are going to continue to drop. Okay, the reason being is the government has already tried to fix the market. They're printing money and giving it to financial institutions so that those financial institutions can try and recover things and bring it back up. And they've done this over $1 trillion of printing of that money over the last 6 months or so, and it hasn't helped. Okay, they also brought interest rates down, which usually causes the market to spike, and it still hasn't helped. And so I don't personally see the market improving very well anytime soon. And I do think we're in for something pretty big, and I don't think it's going to be good for the market. And so if I'm in US Treasuries, interest rates went down. I'm not going to make a ton of money in yield, meaning it's not going to pay me cash flow or interest in a big way, but it's going to be safe. Now, the way that treasuries work is that when the rates go down, the maturity values go up, and I can actually have a higher potential capital gain. And that's what I would be doing, meaning I would buy something knowing that it's probably going to be safe. US Treasuries is the last thing that our government is going to let go down, right? And it's going to be something that would maybe go up in value, and it's going to maybe do that inversely of the market. And that's what I would be doing right now. It wouldn't be something where I'm like trying to get rich on the market and buy all this stuff on sale. I'd be getting out. I'd be putting my money in treasuries, and I'd just sit there. Let that money stay. I'd stop contributing. First of all, I wouldn't keep putting money in my plan. I'd go put that in the sacred account instead. But that's a safe place for me to have my money since I can't move it. And I want to give that solution because I don't want to be the guy that says, get out of the market, get out of the market, get out of the market, and you can't, and you don't know what to do instead. So again, that's my viewpoint. If you're gonna try that, I would recommend talking to a professional in that area. I'm not a broker or anything like that. That's just my thought. Anyways, I hope that this gives you some insight. If you'd like to learn more about what I'm doing and maybe how I can help you, reach out to me, shoot me an email, hit me up on social media. Can't wait to talk to you next time.